Everybody, it is Ryan from Happy Trader here. The last 2 days have been crazy. We had a bank holiday on Monday. Tuesday, we had Joe Biden speaking about some geopolitical stuff. Stayed out of the market, no trading videos for those days. Today, if we're looking at the markets, we are going to take a trade here, but we are looking at divergence in the market. So let's go. We're looking at the NASDAQ futures. That's probably what we're going to be looking to trade. Let's go ahead and just take a look at the 5-minute chart. Looks like we're kind of in a downtrend there. And then we have the ES. Let's just check that. And see if we can pull that up real quick. Make sure that that kind of correlates. But it looks like, yeah, we're looking a little weak on the indices here. And you can see that we're in kind of a downtrend already on the ES. So not to say it's something that couldn't, definitely, like reverse in pretty much a heartbeat. It sure could. But let's go ahead and just trade off the charts. We're just going to switch back to the NASDAQ. We're going to keep it really simple. We're going to be using Thinkorswim futures platform. Looks like according to speaking with customers, most of you are using Thinkorswim. So we will be using different brokerages when we're trading different instruments, like the E-Trade video the other day, and then of course paper trading you can do right within TradingView. And we'll go ahead and today take a position on the NQ. So let's get right to it. We are looking like we are on the downs. So we are going, there's no reason for us to try to time the market here. Let's just go down a time frame, 3 minutes. Let's see if we have any opportunity for a scalp. In the 3-minute time frame, that gives us a clue. We have our downtrend signal. So we're going to go ahead and take our, I think we might have just gotten one on the 5-minute. Let's just make sure. You can see it down here, and we do have it on the 5 minutes. So what we're going to do is just go back to Thinkorswim. We're already on the NASDAQ, and we are going to just see if we can get filled. And it wants to pop. That's perfect for us. And let's see if we can get filled. Okay, and we are filled. And with the NASDAQ, as usual, this is a full-size NQ contract. If this scares you, just watching the video of the drawdown entailed here, definitely trade with the MNQs. Do not use the full-size NQs. You can use the MNQs. That's 1/10 the size. So instead of a $150, $130 drawdown, it would be a $13 drawdown. So that just goes to show you what we're going to do is just hold onto this trade. If it needs time to materialize, I will stop this video and then just resume the video. So let's just hang on and look at things. Let's go back to our chart. You can see sometimes when we get these flat lines here on our trend signals, that can indicate a really choppy day, and that's kind of confirmed with the Dow and the S&P. You can see that things are just kind of sideways, and you can see what a sideways day looks like, versus a trending day just by going back just a little bit, and you can see that we had our big trend day yesterday on Tuesday. So even though we did get a little bit of sell-off toward the end of the day, so let's go back to the trade, and we are going to just hang on to this one here, and it just needs time to materialize. But we are trusting our signals. You can see it's starting to reject that move slowly. I'm going to go ahead and pause the video. It is October 11th, Wednesday, 11:47 a.m. Hey, Ryan again from Happy Trader. It is now 12:05 p.m. Wednesday, October 11th, and we are just waiting for this slow market to go down. And you can see that we are kind of ready to get our move. Let's look back at our chart. You can see that we just went with our 3 data points for Happy Trader Sentiment AI. Otherwise, we would have just been looking at sideways candle charts. So we have our sell signal, we have our red Illuma trend indicating a downtrend, and then we have our confirmation AI signal. and that gave us the courage to hang on to a short position with divergent markets. We're going to go ahead and flatten that out, and that's going to be, let's see if we can get out of there, a $205 trade, and that's just pretty much a scalp. You know, it wasn't a swing trade, it wasn't a very short-term scalp, but that's kind of what you get. We're just gonna, you know, switch back. What you can see here is on these divergent days, the market will just gyrate from going, you know, maybe just the NASDAQ positive, and then maybe the ES, the Dow, and the NASDAQ go positive briefly. Then you have like the ES go back down to being negative. So the best thing you can do is just not, what I recommend doing is just going with the signals and keeping it simple. Now, if you're afraid of, like I said, trading a full-size NASDAQ contract, you can trade the MNQ instead of the NQ at 1/10 the size. The other thing you can do is purchase options, and you could purchase, I would recommend, because of theta decay, don't purchase the options that are 0 DTE, meaning they expire today, or maybe even the ones expiring in a week. I would recommend about 30 days out per contract, and that's just going to give you less theta decay. 60 days out is even better, but not everybody has that kind of margin. So that was today's trade, and we booked a nice little profit there, and it was just maybe a 15-20 minute trade altogether, and that's just a short on the NASDAQ using our 3 sell signals that are acting in tandem, and then we did actually go down in time frame to confirm, and if you go up in time frame, let's see if we have anything there yet. Nope, on the 15-minute we're still showing up, so that explains why we're kind of divergent here, and the indexes can't figure out which way they want to go, but they will eventually resolve and figure out which way they want to go. But that's today's video. We were trading on the 5-minute chart on the NASDAQ, and we did very well, $205. Have a great day, everybody, and happy trading.